When Bitcoin first appeared in 2008, it started to follow a strict 4-year cycle, known as the Bitcoin halving. This is an event where the amount of Bitcoin that are newly released to miners that are mining blocks are cut in half. And each time, this has led to some sort of supply shock, leading to a massive bull run and then a disastrous crash. Currently, we are near the end of one of these cycles. So, will Bitcoin and other cryptocurrencies crash again? Or has something changed? Well, let's look into it all. When cryptocurrencies first appeared in this beautiful world, there wasn't a lot of attention going towards them. If you look at, for example, Bitcoin, you can see that in the early days, Bitcoin was worth 6 cents. Everybody knows that it was worth basically nothing. And the market cap was not even 1 million, near 200,000 in 2010. So really nobody was paying attention to cryptocurrencies. Overall, things were incredibly primitive back then as well. Many exchanges didn't even exist. Think about Coinbase, for example. They weren't around. Stablecoins, those weren't a thing. DeFi, what even is that? However, nowadays, all of that has evolved and matured a lot more. Meanwhile, the amount of money flowing into cryptocurrency has grown exponentially. Even if you look at all cryptocurrencies, you can see there's over $3 trillion in cryptocurrency, which is much more than many countries out there, like, for example, the Netherlands, where I live. So back in the day, anytime these block halvings happened, the effects were really big. However, as time has gone on, the effects of these halvings will at some point become negligible. At the moment, they're releasing around 3.125 Bitcoin every 10 minutes, which is around the block time of Bitcoin. But in the meantime, the amount of Bitcoin that is out there is already almost at 20 million. Almost all the Bitcoin that will ever exist are already out there. So cutting the new issuance in half will have a smaller and smaller and smaller effect, which diminishes the effects of this supply shock. So at some point, these Bitcoin halvings will not matter as much as they did before, especially if people become less sensitive to them and people expect that to happen, because then they become priced in. All of this makes me believe at this point, and because the next halving will put it at around 3.6 Bitcoin per block, all of this makes me think that at some point, and I think we are at that point as we speak, Bitcoin halvings will not matter as much, and we will see the cryptocurrency space consistently grow based on people investing and building on top of it. Which wasn't really a thing when Bitcoin was worth 6 cents and not even $1 million market cap. A lot of the players that are currently in the field of cryptocurrency are sticking around for the long run. Think of Coinbase, who's building on top of Ethereum and also messing around with Bitcoin. Or DeFi projects like Aave or Balancer or Uniswap. All of them are also here to stay. Even a lot of the strategic reserve companies are here to stay for the long run. They want to be here to build out, they want to be here to acquire more Ethereum, acquire more Bitcoin, acquire more whatever specific token they think is valuable or has a use case, and they're not going to leave after just 1 year. Companies like Bitmain Immersion Tech, who is one of the biggest companies collecting ETH right now, like an Ethereum reserve company, has only continued to buy up more and more ETH. Even if other people are thinking, oh, ETH is dead, the crypto cycle is over, no altcoins, they continue to buy. Every dot you see here is either a decentralized finance company, like someone building on top of Ethereum, or a strategic reserve company buying more ETH. So really, they're here to stay. These cycles will not matter as much, and we are seeing a similar thing with Bitcoin, as well as other cryptocurrency projects. Even if you look at Bitcoin exchange reserves, the amount of Bitcoin available on exchanges for people to buy with their dollars, euros, yen, whatever they have in mind, you can see that this cycle, basically after the last halving, things have kind of changed. The amount of Bitcoin that is available on reserves, like on exchanges, has only gone down and down and down and down. Even as price has increased from $73,000 to more than 128 at the peak so far, the amount of Bitcoin on exchanges has only really gone down. So at some point, this will create upward pressure on the price. And even if you look at the long run, sadly enough, this website, I love Macro Micro. I love this website, but their subscription fees are insane. But even if you look here, you can still faintly see the blue. That was kind of the peak, which was around 2021, the last cycle. And ever since the last cycle, for the first time ever in Bitcoin's history, as you can see, for the first time ever, exchange reserves have consistently only really gone down year after year for around 4 years at this point, which will only get worse because the amount of Bitcoin being added to the circulation is only going to diminish. But at the moment, we're already at a point where the supply squeeze is very strong. And we can see a similar thing with Ethereum. Ethereum has also since 2022, this is the furthest this data goes, sadly enough, ever since 2022 has just lost ETH. There was a small stint where the amount of ETH on reserves went up again, but now it has only gone down again. So the last 4 or 5 years, both Bitcoin and Ethereum have become more rare, regardless of supply and demand dynamics. Well, supply dynamics, the Bitcoin halving, or the amount of new Ethereum that is issued per block, it is not enough to keep up with demand. And at some point, this will translate into higher prices for both assets. Like I said, the Bitcoin halving doesn't matter as much. The amount of new cryptocurrency, Ethereum and Bitcoin specifically, coming in is already so incredibly low that we're already seeing the amount available that people will be fighting for at some point going down, down, down. Now, in the meantime, a lot of new use cases have come online on cryptocurrency blockchains, specifically Ethereum and other smart contract blockchains. Two of those that are driving a lot of growth are stablecoins, which have grown at an exponential pace, and the majority of these stablecoins are launched on Ethereum and Ethereum Layer 2s, as well as real-world assets. So think of treasuries coming on the blockchain, or gold, or real estate, or stocks, which has all kinds of advantages. And this is another massive driver of growth. And worldwide, with laws like MiCA and the Genius Act, all of this has been codified into law, has been accepted. Companies can build on it. Users can use it, can pay taxes on it. Everything has been taken care of. So this is another major driver of growth. And even a lot of DeFi companies are getting in on the action. As many of you know, one of my favorite DeFi platforms is Aave. It is a lending and borrowing platform where you can deposit cryptocurrencies or stablecoins and get yield on it. However, now they have created what's basically a savings account, which will grant up to 6 to 6.5% on in interest on stablecoins, while being protected up to $1 million per account. There's not a bank out there that can actually rival this, which is something they are heavily advertising. Now, the feature isn't really out yet, the app itself, but it looks very promising. And as it states here, the savings rate is unmatched. Banks pay barely anything. Some specific lending platforms offer a decent yield of 3, maybe 4%, but nobody offers 6% as a base yield on basically savings, with protection up to 1 million. Most bank accounts don't even protect up to 1 million, it's $250,000. So these companies are moving in on traditional industries as well, regardless of the cycle. It's not like, oh yeah, the Bitcoin, this halving cycle is over. You know what? We're just going to abandon all these projects and we're not going to build out. We're not going to do anything. We're not going to get new investors in or new cash or approach consumers with new interesting products. No, we're just going to stop all that. No, none of that is happening. They are launching stablecoins on blockchains. They are launching real-world assets like treasury bills, commodities, stocks, private credit, all kinds of stuff at a rapid pace. DeFi companies are launching new versions of their apps or other products that literally rival industries like American banking. Again, I'm not sure if the Bitcoin halving and these cycles are going to matter as much as people think. Not anymore, at least. The world of cryptocurrency is no longer hiding in the shadows. It isn't just a small blip on the radar, a small industry that's very insignificant. We can see strong adoption across the globe, and even gigantic companies are coming in now. From MicroStrategy and Bitmain buying Ethereum and Bitcoin as reserves for their companies and their main investment strategy, to be honest, to Coinbase and DeFi projects like Aave taking on industry giants like banking, like the traditional banks like JP Morgan Chase, by offering stablecoin products and investment products that are superior to what the old world, old finance, traditional finance has offered. So while many think that the Bitcoin cycle is going to end and Bitcoin is going to go down by 80%, of course, I am not too sure about that. I think there's a decent chance that the cycle will actually continue, that we might see volatility here and there, but we will see a consistent growth. For example, here, if you look at the chart, you can see this was an important point for Ethereum to defend, and it has done so successfully. And now it's currently fighting with the 50 moving average. And even if you look at Bitcoin, you can see that it has gone down, and the 50 is below the 200, and we did go below this important support level to this support level even, but now we have bounced off it and we are even around this support level and around this trend line. But if we're able to move around here again, around $100,000 Bitcoin, we could very well continue to go higher. At some point, Bitcoin was going to lose its wild cowboy status and was going to grow in line with demand, adoption, and people building on it. Same goes for Ethereum, same goes for Solana, same goes for a lot of cryptocurrencies. At some point, it's not about the hype and the stimulus or the Bitcoin halvings. At some point, it comes down to actual use cases and actual adoption. And I think we finally reached the stage where cryptocurrency is becoming mature. So, before selling all your crypto thinking that the cycle is over, think again, because it might be better to stick around instead. Thank you all so much for watching. I hope you enjoyed this video. Be sure to check out my eToro. Links will be in the description. I do investing there. I run a whole portfolio, and if you want your investing to be easy, you can just copy my portfolio completely free and do exactly as I do, invest in the exact same stocks, cryptocurrencies, and ETFs. So be sure to check that out. And I hope to see you all in the next video, and may the markets be with you.